Welcome to today's What Will Move the Market show. I'm your host Prem. It's Friday, December 26th, 2025, and here is everything you need to know as the markets open for today. Wall Street took a well-deserved holiday yesterday on Christmas Eve, but not before leaving us with some impressive records. The S&P 500 climbed 0.3% to close at 6,932, marking a record close. The Dow Jones wasn't far behind, rising 0.6%, or almost 300 points to settle at 48,731, also at a record high. The Nasdaq Composite added 0.2% to finish at 23,613. This marks the fifth consecutive day of gains for all major indexes, the so-called Santa rally in full swing. Trading was extremely light with roughly a third of normal volume, but the sentiment was undeniably bullish. What really lifted spirits was strong third-quarter GDP growth at 4.3%, beating expectations and showing Americans are still spending despite inflation concerns. The upside, though, has Wall Street pricing in fewer rate cuts ahead, with the Fed's recent hawkish commentary dampening expectations for aggressive loosening in January. Now let's look at how Indian shares traded overnight in American markets. Infosys added $0.10 to 18.67, a gain of 0.54%. HDFC Bank rose $0.12 to 36.40, up 0.33%. ICICI Bank declined $0.12 to 30.03, losing 0.40%. Reliance Industries dipped $0.80 to 69.50, a loss of 1.14%. The mixed performance here reflects some profit-taking in energy and weakness in IT, though banking showed resilience overnight with HDFC holding gains. Keep an eye on HDFC Bank heading into today's session as it continues to track the broader banking momentum we've seen in Indian equities. Moving to Asian markets and the gift Nifty cues for today's Indian Open. Asian markets are set to open higher in holiday-thinned trade, and the data is backing that up. Japan's Nikkei 225 has jumped 0.84% to 50,830, continuing its strength. Hong Kong's Hang Seng edged up 0.17% to 25,818.93. The gift Nifty, however, is offering a slightly cautious signal, trading at 26,118, down 59 points or 0.23% from yesterday's close. This suggests the Indian market might open a bit softer this morning, though the broader Asian tone remains supportive. The gift Nifty decline of 0.2% shouldn't spook anyone though. We're in the final week of the year with minimal liquidity, and index futures often churn lower in thin trade before domestic cash markets add their own color. If Nifty holds above the 26,000 level at the open, a move toward 26,200 to 26,250 remains very much on the table. Watch for consolidation in the 26,000 to 26,200 range as profit-taking battles with year-end bargain hunting. From a global perspective, the narrative continues to revolve around US tariff uncertainty heading into 2026. President Trump's reciprocal tariff regime has created a sort of guarded optimism in markets. The so-called taco trade, or Trump always chickens out, has investors betting on negotiated deals rather than full-blown trade wars. However, emerging markets and India, with their significant IT and services exports to the US, remain on watch for any escalation. Currency markets have seen the dollar slip nearly 10% since January, which is a slight tailwind for rupee-linked exporters. Crude oil is holding steady around $62.29 to $62.45 per barrel, a modest rise driven partly by Venezuelan geopolitical tensions. This level is manageable for India's energy balance sheet. On the domestic front, here's what matters before the bell. Parliament has cleared India's insurance bill, allowing 100% foreign direct investment in insurance companies, removing the previous 74% cap. This is a medium to longer-term positive for domestic insurance companies, brokers, and distribution platforms, as it opens doors for strategic foreign capital and expertise. Foreign institutional investors have turned net sellers, having sold 1,721 crore on December 24th. But domestic institutional investors stayed strong, buying 2,381 crore. The domestic bid continues to cushion the market even as global money rotates. The RBI is meanwhile executing a liquidity injection of about 2.90 trillion rupees through bond purchases and open market operations, providing an undercurrent of support for rate-sensitive stocks, especially banks and NBFCs. India VIX, our volatility gauge, has traded around 9.19, reflecting subdued fear and complacency as we head into year-end. For technical setup today, Nifty 50 faces immediate resistance in the 26,200 to 26,250 zone, with a decisive breakout above 26,250, potentially opening the door toward 26,400. On the support side, the index absolutely needs to defend the 26,000 level, backed by the 20-day exponential moving average around 26,000. A close below 25,950 would signal early weakness and profit booking. Bank Nifty is a bit more interesting. It has been consolidating near 59,000, showing strong put open interest around 59,000 and call writing near 59,500. As long as Bank Nifty holds above 58,800, a buy on dip strategy favors a move toward 59,500 to 60,000. Commodity markets present a nuanced picture. Crude oil at $62 per barrel is stable and not alarming for India's import bill. Gold touched near $4,480 per troy ounce, hovering just below the 4,500 mark, and has been moving within a bullish channel. Silver at around $71.93 is also in an uptrend. Both precious metals have been supported by geopolitical uncertainty and safe haven demand. Though in rupee terms this means some caution is warranted for domestic gold investors on sharp corrections. Here's what we need to watch today. Markets are opening in the final week of 2025 with minimal liquidity and most institutional players having squared off positions. Expect Nifty to consolidate around the 26,000 to 26,200 range until we see a decisive trigger. Bank Nifty shows better structure with clearer support and resistance zones. The insurance bill rally is a medium-term tailwind, but don't expect a sharp immediate spike on a holiday Friday. FII flows remain a key barometer. If foreign sellers step back even a tiny bit, you could see a pop toward 26,300. Tech stocks have been weak, IT index down 0.51%, so watch whether Infosys or TCS stabilize into today's open. Metals like steel and ITC showed strength yesterday, so selective buying in commodity-linked names remains tactical. For traders and investors, bias remains constructively bullish as long as Nifty holds above 26,000, but avoid being too aggressive given the thin liquidity. Use tight stop losses around 26,000 and don't chase moves too hard in a holiday-shortened week. Stay tuned for the evening wrap and send in your questions. Subscribe to this podcast to hear US every day and have a profitable trading day ahead.